Well, good morning, everyone. Scott Henderson Shooter. Hey, this is a makeup video for August 5th. For some reason, I cannot access my Zoom to get to the video. I've been trying since late yesterday, and I don't know. It's not letting me export the video from the cloud. So, hey, we're just going to do a new one. All right, let me jump into this. I want to spend a second and talk about the FEMO repo facility. And Bessent came out yesterday, and they've made a request to expand the size of the facility. It's currently at 60 billion. I haven't heard if that was moved this morning or not, but on a day-to-day basis. However, I want to express how significant this is. Basically, what Bessent is telling us is we are in the middle of a currency crisis. So the function is real simple. Japan borrows US dollar, converts them into yen, and then they move them into the yen currency. So it's a money pit, right? And basically, in Bessent's comment yesterday is that $60 billion a day is not enough. I want that to sink in, all right? That kind of expresses how extreme this is. When this breaks, and notice I used the phrase, when this breaks, all hell's going to break. And the reality is we have about 7 countries right now that are in a very similar. The most significant ones are South Korea, Taiwan. We just robbed Europe of, what currency we were holding for their stability to buy the yen. So you have this domino effect that can happen pretty quick. And what will happen is they need to raise capital. The thing is, Japan has a privilege here. They have access to the Fed fund window. A lot of these other countries are not going to get that. And what they're ultimately going to do is they're going to sell treasuries and sell gold to raise cash. Now, the only caveat here is we have a lower oil price this week, which is actually fantastic, because if we had higher oil prices this week, something would have already probably blown up, because it would have been too deep for anybody to go in there and bail it out. But I wanted to spend a second there before I jump over to the charts. The noise that I'm seeing, we're seeing it now. It may have been 3 months ago, I started talking about this, that our volatility should expand. And we're now starting to see it in the AI names. SanDisk this morning, for example, down 10%, beat earnings, etc. And, we've had a number of other names that obviously beat, and a similar thing happened because the outlook wasn't good, as an example. So this volatility, the noise, when we have a currency crisis, it doesn't necessarily resolve in the fashion that we would think it would. When these different lenders have to borrow money, obviously they need to put up some kind of collateral, right? And when those margin calls that are associated to those loans actually come due, that's where we see the turmoil, because what you're seeing is they're having to readjust other assets, including dollar holdings, including treasuries, as well as stocks, because really no one is invested in one instrument. So right now, the dollar is supportive of a bearish market. And, the Monday and Tuesday, I think, was an outlier event. I mean, we had, I think a euphoria that came down from, Fed has stopped the yen carry trade unwind. And then, the reality coming in yesterday and today is, guess what? No, they didn't. All right, it's a temporary fix, and we don't have a time horizon for how long it is going to last. So that instability, I expect to stay there, as well as, if I'm right, price will continue to hit extreme. So we will see more volatility in many different names. With that, let me jump over to the SPY. Had a nice recovery candle this week. I have a couple slopes built in here because we're kind of building out this wedge, confirming trend support. I find that to be sloping. So I do expect this 729 to hold and continue pushing up. At this point, I see no reason, as long as we have this expansion of capital. Realize if we look at the call volume in itself, and this morning, everybody who opened up long calls yesterday, there's a big chunk of them that are upside down. And I like to go to bar charts just as a good expression of that, because this gives me a good visual of what's going on in the market. I always look at open interests, but if we look at just the top 10 open interests, Apple, CCJ, BMNR, Tesla, Meta, Halliburton, Run, Monster, right? Every one of the moneyness of those positions is underwater. I mean, we're talking 50,000 contracts in Apple, 15,000 contracts in CCJ, BMNR is 13 contracts, etc. Halliburton's is 10 contracts. We have some outliers like Micron. Now, NOK is up, all right, on the puts, right? Notice, but technically that's bearish. So when I look at this in the grand scheme of things, as I'm looking at the volatility here, everybody who is long calls right now has a hell of a lot of exposure. And the reality is all we need is one decent follow through day to the downside where we get a decent clip of 2 to 3%. Majority of those call contracts become worthless or have little value compared to where they are today. So that is going to keep me on the sidelines. But I don't see this impulse wave stopping. I see it as a leading diagonal. So theoretically, our 3 should come in around 825. Our 5 should come in around 900. Now, realize the timeline, if I'm using the slope of this trend, that puts us at February 27 for our wave 5, and that puts us October of 26 for our wave 3. Now, could that broaden and become a broadening formation and we take out these lows shortly? Yeah, it could. I'm not going to say it's not. And actually, with increased volatility, there's a higher likelihood, not higher likelihood than anything else, but there's a high likelihood that could manifest. All right, jumping over to the NASDAQ, nice pop. Now, one thing I kept on my charts was the bearish look versus the S&P 500. I think the S&P is bottomed and heading up. However, the NASDAQ is not. Realize as this broadening or these manifestations come out of this currency crisis that we're experiencing, who's going to have the most exposure? Well, multinational. Now, this morning, a number of our Mag 7s are up. However, yesterday, when I was actually doing the live version of this video, we had about 70% of them that were down in significant percentages at that time. And so we're going to see this bit bop or pump and dump, however you want to describe it, scenario in price simply because of the volatility that's going on with that currency and that carry trade and et cetera, and the insecurity that's going across. So it's not just in the United States. The Fed policy uncertainty right now is at the highest extreme it's ever been in. Now, whether that is because of Warsh's lack of reporting and maybe that, dot plot provided some security to the markets or not, I don't know. Is yet to be seen, whether it's just a temporary thing or is there really that much insecurity. Now, I also took a look earlier in the week at the number of countries who were publicly arguing that the U.S. is bankrupt, in trouble, because we've heard that from a couple of the Gulf states, that, hey, ultimately we can't stay solvent. There have been people that have been talking about the dollar dominance is done, it's over with. That association when the debt to carry or cost to carry the debt exceeds expense or defense spending, that's typically when a country's enlightenment period has ended. I don't know what that outcome is. However, I do know this: multinationals will be hit hard in this currency crisis. So to me, I'm looking at this as this is an ABC here. The question is, do we get a larger ABC structure where this becomes our A and whatever high we get in here, I would think that it comes back and tests that band around 739. And then we get this next leg lower and something like equality back tests the shelf. So I still see quite a little bit of potential downside in the NASDAQ versus the S&P 500. I want to cover some ETFs. It looks like our floor is in, right? However, I want to go back in my map here. So if this is, and it could be a broadening formation here, if that is the case, their 5 will come in somewhere around here, around 480. We're getting some follow through, so we got some interested parties in buying. So I don't know. I'm not going to say 50% because it's probably closer to a 30% likelihood that follows through back to the downside here, because we have taken out the body of this candle and we have taken out the base of the shelf, and right now it's holding. So that is bullish, but realize our next high will come in somewhere around a little over 700, 709, and then we should reject again. So we're going to continue to see this noise up in this level as far as semis are concerned, and that's going to wash, of course, into the indices. Now, communications actually looks a little bullish here. I think we do test these highs about 119. Now, my madness here of going through this, I just want to explain the breadth of how one piece of the market leads and everything else is kind of confused, doesn't know what it wants. So we have some strength. We also have some neutrality and some weakness. So consumer staples were actually in a decent spot yesterday when we looked at them, and they were leading. Today, we're not, all right? So we look at XLV. Obviously, we were leading yesterday. Now we're not, all right? Looking very toppy here. XLU is actually declining. So we have no flight to safety here. No flight. That's usually the one thing I look at. A couple of other things I look at really to determine the flight to safety, VIX, etc. By the way, we're in VIX expiration, so it should stay elevated. So it probably isn't a good tell for volatility in the market. It's just a seasonality issue that goes through with a VIX kind of thing. So just keep that in mind. Now, XLB material really is on the verge of breaking out. So I think we take out this 54. I do think we head towards this 56. So we have stellar strength in material. Now, looking at TLT, we put in all-time lows right down here, wicked off, got some buyers. I want to come down to the 4-hour on this one for a second. I just want to go through this downtrend that we're kind of in here, right? So we have this resistance channel that I think will hold, that we've built off of here. I don't think we get back above this rate, right? So if we do, then I have to change my mind. Otherwise, I do think our target's lower around 80. And realize the dynamics are changing here with the Fed opening that Fed fund window, because we've not done this. This is uncharted territory. So in that sense, my bias is still a little bit lower. XLE, obviously we're coming off with oil coming off to the downside likely. So I see this as an ABC structure. So I'm looking at this as A, probably our B, and we should get a C, something like this. That's my 2 cents. However, it breaks above the wick of this high at 61. It's going the other way, which is always the case, by the way. You just need to understand where you're right, where you're wrong, versus a bullish case scenario versus a bearish case scenario. Because the reality is there's really only 3 outcomes: a bullish outcome, a bearish outcome, or we go nowhere and we're neutral and we're pegged. That's it. There's really nothing in between. Either we attract buyers or we attract sellers. And that's pretty much the case. Now, financials are still running here. Now, realize I don't think that the total value of the new crypto bill, the Clarity Act, is priced into banks yet. Realize they have entirely new revenue streams potentially there by moving capital into stable coins. And realize there's really nobody who's going to make a lot of profit off that, because it's not even going to make the same capital that CDs are making as far as a return. It should be a less of a return than that. So you're going to have a lot of people that go in there and get stuck and are afraid to sell because they're flat or a little underwater. Same scenario, but the banks keep making money. Just wanted to bring that up. All right, XLY is kind of bullish. Now, consumer discretionary looks a little better than consumer staples here today. I think that's the case. I do think we come in and test these highs and ultimately take them out. So peaking drive 1, peaking drive 2. I'll be looking for a third one here somewhere around 130. XLI is also bullish. Now, thing is we should come around the top around 192, and then we got a pretty decent drawdown according to the primary wave structure. Now, if I jump out to a monthly chart on this one, I'd like to do this a second. I like to look at a chart in a couple of different ways. I like to look, well, what does this pattern tell me we're going to do here? And we're broadening here. Notice how we're broadening. Notice I have this broadening formation drawn out here, this whole wave structure. So I expect us to skirt this upper line, and then at some point we'll reject. And when we get that rejection, the most likely case is we test the floor of that broadening formation. Now, do we get another dip that resets it and we end up moving this broadening formation up to the next level up? Yeah, that could happen. I mean, that's just the progression of how stair steps and Elliott wave counts work. But ultimately, my main point here with the industrial is this looks really bullish, right? And on top of that, with materials catching a bid, there's something brewing in the economy that hasn't really washed. I mean, even though we have an earnings at 16+%, the highest in history, there's a lot of companies that aren't participating in it. So let me take a look at silver, come out to the weekly on this. I really like this. I pointed out this yesterday, and it was a little lower, $53 yesterday when I was doing the live video. I like silver here. I think it's a good spot. I think it's a safe place to go. Reason we've had this huge drawdown, MACD is crossing, RSI has a clear bottoming formation. You have a 4-candle reversal that has occurred right here now. So the likelihood is at least 50% back. So, 50% at least back to $65 for where we are here now. So I think it's a great trade. All right. Also, gold is getting a bid. Now, just keep in mind, I want to talk about this with central banks. Central banks are the big buyer. And we saw it this morning. The follow-through came in. They started buying more gold. The reason they bought more gold, that insecurity or the lack of confidence in central banks across the United States on having, or across the world, as far as having a plan on what the heck they're going to do in this economy. We don't have a lot of confidence that they have a plan to get us out of it. And that's the challenge here. Also recognize, even though gold looks really good, gold will be the second thing that's liquidated besides treasuries when someone like Japan needs to raise capital and that Fed fund window no longer works. So mind you, this is probably a shorter term trade if you're going to jump into gold, maybe trade it to about 420. And then I would probably take some profits. Let's take a look at Bitcoin. Still in this base. My thought is Flushing Drive 1, Flushing Drive 2. We're rejecting price here. It needs to clear that 65,740, right? It needs to hold above that on the weekly. Otherwise, we have a destiny with 55. And ironically, October, and I'm forgetting the person on Twitter who talked about it, but there were 1,064 days. So in other words, from this trough to this peak was 1,064 days. From this trough to this peak was 1,064 days. Now, I'm not back testing that, but I'm going to look at it. But apparently from this trough to this peak was 1,064 days. And this was like 360 some odd days. 360 some odd days, and 360 some odd days will put us around 43,000 in October. So it'll be October of 2026 before we get there. I just found that ironic. I'm going to go back and vet that, look at that, and determine whether that is really the case. But I'm like, could we be in such a manipulated market that's unregulated? Of course we could in this climate. So I just wanted to point that out. So my basic thought with crypto is that we are heading lower. I'm thinking that third drive. However, if that dynamic is real, we're looking at $30,000 or $40,000. We're going to test the base of this shelf range, if that's the case. And it's totally doable. Count looks that way. ABC structure, even though we have an impulse here, right? Looking at this way, that's B, C. I mean, we could go all the way down to 25,000 as far as equality there. All right, let's jump over and take a look at some names. Now we have UUU on. This was a great place with Trump and his announcements. Our targets are 20 to 25, nothing huge, just a safer place to go. We also have SpaceX on, just a little underwater this morning. Got to come down to 4 hours, see that one. But again, at that base, that first green candle coming out of there was where I added. I was like at 113, I think. I won't add until we get a breakout above 125, right? That's structurally how I'm looking at this. I just put out that direct to device article, all right? And SpaceX is my anchor here. I want to build an 8% position in SpaceX. So the lower prices I'm not concerned with. I do want a large position in SpaceX because I just don't see how, at least short term, until the technology fails, right? And at this point, I don't think Elon is wrong in his math. Look what the guy's built. So like I've said before, I'm going to give him the time. I want to get a piece here. And that's what we're trying to do. SpaceX Hive is just sitting there. It's done nothing wrong here, but we haven't been bought out. Again, all this noise about, Amazon walked away from one of their large data center projects. I expect that to continue. Right now, there is a lot of political noise revolving around the building of new data centers. And even the groups have gotten noisy for whatever reason. Now, this could be China because China wants to control AI, and all they have to do is get America to stop building the data centers, and they've won the game. So, how much money is it going to cost to get a few thousand people out protesting at every single event related something being approved for AI? Yeah, hey. But the existing data centers that are being used for mining are huge candidates just to be absorbed, and Hive happens to be where I'm putting a little piece there, or at least my target is January $7 calls. Be candid with you, they probably expire worthless. However, I want a piece there just in case. That's sort of my thought. All right, some names that you guys wanted me to take a look at. I'm going to go through these again just so for the benefit of everyone here. Looking at NRG, Flushing Drive 1, Flushing Drive 2, potentially a third here. We're getting a little bounce. Can't even consider the bull case until we're above 136.98. ENPH looks a little bullish off of this level. I just don't like a bottom of a broadening formation in a floor. And the reason being is quite often they end up being an ABC. So you end up getting like this to this scenario. So, and equal. In other words, where A equals B and C. So to me, this visually looks like 26 bucks on the tape. However, if somebody wants to venture into ENPH for any reason, the other caveat I want to point out is declining oil. Straits of Hormuz is resolved and Russia is resolved. Guess what? We're going back to 50 bucks as far as oil from where we are now. How is that going to benefit alternative energy companies? It's not. So that's my 2 cents. Looking at IIPR, I don't think it's ready yet. My buy box is a little bit lower. All right, so the golden box thesis, well, it's actually not a thesis, proven fact. Certain stocks typically revert to a specific Fibonacci extension based on their pre-existing price structure. So this is golden box 1. What I've done is tiered them. So we have between the 382 and the 50% fib, between the 50 fib 618, between the 618 and the 786. So obviously the darker color is the better spot to enter. But a wick into the shallow box in a bullish case scenario is how it plays out. So when we have that euphoria in a name, and I would classify this leg as euphoria, and we get a back test and we get a wick in there, I actually like IIPR here because of that, as far as that structure. So I'm looking at this as 1. And this was our 2. We put in a 3, an equal 3. We're up here around where the fib targets are, right? And then we put in our 5 and head up towards that direction. Probably be a little shallower. That is what I would say is my base case. Extended is here. Elongated would be way the heck up here at 92. So it's got a decent upside from here. So if you have a position, hold, or I would hold. If you don't, it's probably a good time to start scaling or selling some cash carried puts on it. All right, looking at team, actually a great look as well. We tested the lows, got some clear divergence on this here, right? We've now taken it out, tested, couldn't break out the shelf. That's the only weakness I see. It needs to take this out, right? If we reject right here, we're done, and we're going to go in and come back and build out a flat here. And realize the time horizon is what we want to look at as far as the flat. So if you look at the flat timeline here, and I'm just going to steal with this leg, again, like I've said, every stock has an MO. That doesn't change. So until we actually got out and above that flat was about this timeline. So if we move this over here, stick it here, consolidate it down, that's sort of what we're going to look like. So we could be stuck in this flat really until December of 26. So just keep that in mind as far as position sizing. ARKG, I actually like this one here too. And since yesterday when I first looked at this, it's been moving. I'm looking at its wave 1 being completed, 2 is done, and we should head into a 3. So worst case scenario is going to come in here roughly about 56, or base case, let me rephrase that. Extended, which should come in around 60, and elongated should come in around 65 as far as our wave. So ARKJ is a good spot. BABA actually is a good spot too. I actually like it here. We've had follow through since yesterday. I think we have a clean wave 1, clean wave 2. I think we're heading for a 3 around 147. And I'm just going to say we're wrong. I mean, and it's or I probably should say the structure is failed. But we have this little breakout right here. Long as that 117.45 holds, right, we should be good. In all cases, this 111.23, I'd close the trade, period, if it breaks below. All right, looking at ALAB, also another pretty name here. We definitely look like we found a bottom. I want to come down to the daily on this one. You know, we've now broken above our last lower high, rejected, came back into that noisy box. So you have this whole little consolidation band right here, and I'm just going to draw it from here to here. I'd expect for us to bop around in there for a while till we decide to break out. The main point is that we don't want to close below the wick of this base here. So if it gets down below 290, that the recovery is dead. And this basically was an ABC structure. So this would be our A, this was our B, and then if we are going to continue to rec, now it becomes a reversion of the mean candidate. So you want to be very conscious. Again, that line in the sand is at 290 for me. Now I want to spend a second on Amazon. The reason Bezos had some large sales, I'm going to come out to the weekly on this. And, you know, it really looks toppy here. I mean, so I'm going to say this is peaking drive 1, peaking drive 2. So we should get a reject. We should test basically 50% of this candle. I would think, right? Reason is this is a real high and tight leading diagonal. And, you know, let me just draw what I see as far as that. You know, they pretty much are consistent as far as what they do. So I'm going to come in here and say, it's going to do something like this where it just puts in these highs. And that structure is exactly what we see here in a visual on this tape at the moment. So it's going to look something like this structurally. and then we take this out, and then we have a big reject. So it's that ascending wedge that you hear a lot of people on the internet talking about, hey, be conscious of those. And the reason being is when they reject, typically you have a potential for a reversion to the mean kind of scenario. So you're looking at a potential drawdown, roughly 30%, 40% from where price is. And, there's a reason why Bezos sold, my 2 cents. All right. Looking at CQQ, now I think we're in this wedge, so I do think we break out and head towards about $60. The shelf that I would use, or I would say I like the bodies of these candles right here. It gets below there, it weakens. Really, it's not dead until it gets down to 44. Again, I'm talking about the shelves, right? The ledges that occur in Elliott wave counts. And, there's a point where you have conviction. Hey, the bull case is still in play as long as we stay above this line, right? Once that line breaks, it's now reduced. However percentage you want to reduce it, I reduce it by 25%, right? So if I have a position on in CQQ and we break below this line, I'm going to reduce it by 25%, period. That's just the structure that I want to look at. Breaks below here, I'm done. I'm out. I'll take the loss and go to the next one. So that's where I think we are with CQQ. Now, WGMI. Now, I went pretty in depth on Hood and Coin, right? Referenced the Bitcoin miners. I actually like the idea, but I would rather go after specific names like Mara or Coin or Hood versus the ETF. And the reason the ETF has exposure to everybody. So if one gets bought out, right, it's going to be a small. So you're not focused in on the capture of the gain in that scenario. So I mean, it's not a bad spot to try it. It does look like we've completed wave 2. It looks like it potentially is a leading diagonal, but structurally, this ABC doesn't look done. It could be though. I mean, our tightest ABC structure would look something like this. Equality based on the history. In other words, I'm measuring these legs, basically stole this, right? And moved it over, as far as the look, giving you a visual. So we pretty much put in our B if that's the case. So I'd like it better around 37. But since I brought up Hood, let's look at it. All right, getting a nice bullish candle. I just like the structure here. They have a much higher degree of revenue multiples coming in from the expansion of crypto, because realize there's going to be a lot of entities. Their storage of AI product is going to continue to expand. They have a good product. They actually have a good banking product for digital management of digital assets. So I would expect that to continue to grow. And the advantage they have is they kind of have first mover advantage here. It's going to be very hard for Chase to catch up to Hood. Actually, it's more likely that Chase comes in and buys Hood, or Goldman Sachs or whoever, or Bank of America. The reason being is that vehicle would help them migrate too. So that's a caveat that I like here. Also, we have a clear wave 1, clear wave 2. So wave 3 should be our longest. I mean, worst case scenario, we're going to get a price around 140. If that extends a little more, extended would be around 154. Elongated would be around 179. So I like that. I also mentioned Coin. So let me take a look at that one real quick. Now, Coin is not as bullish as Hood for me because of this floor. It looks to me like it's a breakdown. We've constantly tested this and it's held. I mean, we've had some huge rallies. Look at these rallies off of that shelf, right? That shelf's holding, right? So we get back above the body of this candle at 169. It is worth chasing up to these highs at 269. So there's no question, right? As a matter of fact, it's on my radar for that particular reason. And since I mentioned Mara, let's take a look at that one real quick. Now, definitely out of the 3 charts in crypto, it is more bearish looking. However, it could literally be done here with this wick off. I mean, right at the shelf. Again, that's that bullish scenario, right? Coming out to the monthly. We have this expansion zone here. So this is our first shelf we need to hold. It's thin. Whenever they have a thin shelf like that, you don't want a breach of that. If you get a breach of that, it's going down here. It probably tests 50% of the box, 662. So you just want to be conscious where we're wrong in this if you're going to something like Mara. Well, at this point, folks, that's what I've got for today. Great trading. Until next time.